Hey guys, Kevin Bupp here, and in this video I'm going to share with you my philosophical views when it comes to real estate investing, really in an effort to help you understand how my firm, Sunrise Capital Investors, makes our investment decisions. Additionally, this video will act as a primer to an asset class that most of you have never considered before, but is one that me and my team are hot and heavy on. And this asset class that I'm talking about is parking. More specifically, surface parking lots and parking garages located in highly desirable central business districts and also prime tourist locations. So let's go ahead and get on to our 5-tier investment thesis and how this shapes our investment philosophy here at Sunrise Capital Investors. The first tier, we seek favorable long-term economics on any investments that we make. So to put it, in order to create legacy wealth, you need to build a portfolio of assets and hold them for a very long period of time. And really to that end, we want to focus on the niches with favorable long-term economics. And what this means to us is investing in a niche where the demand grows at a higher rate than the new supply coming online. And these favorable long-term economics will essentially serve as a tailwind, helping contribute to outsized investment returns over time, which is what we're looking for. Now, the second tier of our investment thesis here at Sunrise is buying recession-resistant assets. Now, capital protection is key to building legacy wealth, and focusing on recession-resistant assets allows our team to protect the downside risk, and when the economy is going well, the rising tide lifts all boats, right? You guys all know that. You've heard that saying before. Now, nearly every asset class performs well when the times are good, right? And the times have been really good over the last decade or so, but the bigger question is, how does an asset class perform during a downturn? Now, we at Sunrise, we want to ensure that we're protecting that downside risk. And the folks that are investing with our team, they're accredited investors and they're sophisticated folks who have already built some wealth and they want to protect that wealth. Now, the third tier of our investment thesis is finding a fragmented niche. And simply put, we like asset classes where institutional capital hasn't yet consolidated the space. And in a fragmented niche, we're often able to acquire assets from smaller mom and pop owners who may be less sophisticated than the larger institutional or private equity players. It's unfortunate, but when institutional capital has come in and flooded a market, it's much more difficult to buy great deals. But in a fragmented, imperfect marketplace where we're working directly with that mom and pop owner, oftentimes we can buy that deal with a nice margin of safety right at acquisition. Now, the fourth tier of our Sunrise investment thesis is creating off-market transactions. I really think that Sam Zell summed it up best by saying, we don't buy markets, we buy deals. Now, our core competency at Sunrise is to buy deals in an off-market transaction direct from the owner. I've actually personally been doing this for more than 20 years, going direct to owner to buy assets. We send out hundreds of thousands of pieces of direct mail over time, making tens of thousands of phone calls direct to these owners and using very unique marketing tactics to target asset owners directly. Now, once we locate a potential opportunity, our decision-making process revolves around whether or not that individual asset is attractive enough in that specific risk environment to actually make the transaction happen. Now, while strong underlying microeconomic market fundamentals are essential, having a strong market is not enough, guys. We leverage our core competency to create off-market transactions. And simply put, we don't buy markets, we buy deals. And now the fifth and last tier of our investment thesis here at Sunrise is invest for cash flow and legacy wealth. Now, to avoid outsized risk, we only acquire assets which have positive cash flow in place from day one. We don't attempt to time the market, guys. That is not a way to make money and create legacy wealth. There's many opportunistic real estate developers and syndicators who essentially promise heavy value add transactions and they eventually mistime the market and their mistakes cost investors dearly. That's not what we're trying to do here. And so to that end, our acquisitions, they must have positive cash flow and the opportunity to create legacy wealth right from the get-go. Real wealth grows over time through the efficient management of capital, buying right and investing for the long term. And for that reason, once we have acquired a great cash flowing asset with appealing long-term economics, our favorite hold period is forever. This investment thesis allows us to essentially build a portfolio of assets which generates cash flow and legacy wealth for our families and for our investors. And that's our 5-tier investment thesis, guys. That's exactly what we follow at Sunrise Capital Investors. And so with that, guys, that's all I have for this video. If the parking space even remotely piques your interest, we just got done writing a free ebook. You can go and download it by clicking on the link in this post, and it's an easy read. tons of information in there, and I think that it will, answer a lot of questions you might have about the parking asset space. So, and with that, I appreciate you watching this video. I hope you enjoyed it. I hope it brought a lot of value to you in your business. If it did, please like it, and I look forward to seeing you on the next one. You guys take care.